We've never seen guidance laid out like this for us ever before. I mean, this was line by line item guidance for each of the different subdivisions at Disney, whether it was the theme park business or the streaming or movie studios. They kind of gave us, segment by segment numbers and exactly what to expect. And really, the biggest thing for Disney over the past few quarters has just been this lack of visibility and so much of investor uncertainty. And they just cleared it all up in this one, fell swoop with this
Nice.
earnings report.
They never did that for me, Geetha. I always had to guess on all that stuff. But for you, they just served it up on a silver platter. What got your attention the most from some of this guidance? What do you think the street really likes?
I think what the street really likes is you have high single-digit EPS growth. Remember, the street was projecting about 4 to 5%. So that's a nice uptick there for 2025. And then going into 2026 and 2027, they're looking at double-digit earnings growth. And the other bright spots were, the theme park business. Now, we do know that there is a moderation when it comes to the domestic theme park business, but it looks like things might not be actually as bad as we had feared. So domestic parks actually performed a little bit better than we expected. And then they talked about some weakness going into the fiscal first quarter. Remember, we did have those two big hurricanes in Florida. They do have a lot of cruise ships that they're launching, and so there's going to be some launch costs weighing on profit. But then you get into the second half of fiscal 2025, and they're expecting those cruise ships to contribute in a big way, and kind of the theme parks to also come back. So I think that's again some source of investor optimism and confidence.
Geetha, I get the streaming part. I'm not sure that I understand the linear TV part and why that's still part of the empire.
Yeah, nobody understands it, John. And that was actually a question for Hugh Johnston and Bob Iger today at the earnings call. They're like, why should you be holding on to this business? Comcast just recently said that they're going to be kind of considering spinning off their cable TV network business. And remember, the big thing that's really coming up for Disney in 2025 is that they are launching this standalone ESPN product. And if they had any reservations in the past about jettisoning, the TV networks business because they were tied to the bundle through ESPN, this kind of definitely opens up the field for them, and it no longer ties them down to the bundle. So they were asked the question. They said that they're not looking into it. They like their portfolio just the way it is. But we really think that once they get that ESPN standalone streaming service up and running, they surely will kind of look into doing something more dramatic, I think, with the TV networks, especially given, a regulatory change.